today. We're going to go over the key aspects of today's CPI data. First, the numbers. The headline CPI month over month up 0.4%. That's rounded. The actual number up 0.38%, rounded up to 0.4. The year over year, 2.9%. That's in line with expectations, but 0.2 higher than last month. The core CPI data, 0.35%, rounded to 0.3%. The year over year for core, 3.1%, unchanged with last month. Now, when we get into the numbers and look at some of the tables is where things get pretty interesting, because unlike the PPI data, this had higher energy prices. When you look at energy, up 0.7, gasoline up 1.7%, fuel oil up 1.9%. These numbers all higher than last month. Now, if you break down the numbers, shelter up 0.4%, owner's equivalent rent up 0.4%, rent up 0.3%, lodging away from home up 2.3%. During the month, after a 4% rise in July, airfares were up 5.9%. That is a big 2-month jump in airline fares. New vehicles, always an important part, up 0.3%. Used cars and trucks up 1%. Apparel up 0.5%. Over the year, motor vehicle insurance, the things that a lot of people look at on a daily basis, 4.7% higher on a year-over-year basis. Other things that we looked at are the key areas here between the relationship between bonds, the Fed, and what we're going to look for. At one point today, the 10-year yield touched below 4%. So touching that 3.9% level in the 10-year. Just briefly, it's now actually back over 4%, but this is a number that is perilously close and leading into a Fed meeting in approximately a Fed decision in 6 days. The question is it a 25 basis point cut or is it a 50 basis point cut?